Today, I'd like to talk to you guys about underwriting and what that means and how it works and what happens during the underwriting process. Hello, my name is Veale. I'm a loan officer with Epic Lending, and I'm a VVA4 here with Vetted VA. Today, I'd like to talk to you guys about underwriting and what that means and how it works and what happens during the underwriting process. I do have some notes on my screen, so I'll be referring to those as we go along so I don't forget any important parts, because it is a pretty long process of your loan application and process. It takes a while for that to happen. It is the bulk of the loan process. So what is underwriting? Underwriting is basically the process that the lender uses to determine whether or not you're an acceptable candidate to lend money to. They are going to verify things like your income, assets, debt and property details, so on and so forth, so they can issue a final approval for your loan. So when does this occur, and how do you get to that point? So underwriting happens after you go under contract to purchase a home. By the way, the majority of this conversation will be based on purchasing a home, not refinancing, but it's a very similar process. So for a purchase, underwriting occurs after you go under contract. As soon as you go under contract, your loan officer will prepare and send you your initial disclosures. And in those disclosures, you will get your loan application that you submitted to them. They'll send it back to you for signature, your loan estimate, anti-steering disclosures, VA counseling checklist, Patriot Act disclosures, any state applicable state disclosures, so on and so forth. There's a ton more things that are in there, but it's a pretty big packet of disclosures that you will review and sign electronically, as long as you've given consent to process your loan electronically. A couple of quick notes about your disclosures. They are time sensitive, so please make sure you review them and sign them as soon as possible. And also, I want to point out that in those documents, you're going to get a loan estimate, your first formal loan estimate for your purchase. And I just want to point out that loan estimate, we do our best to be as accurate as possible, but it is not going to be your final numbers. It's almost impossible to get those numbers 100% accurate from the very beginning, because there's so many variables that go into the final numbers that are likely to change from the time we initially disclose your loan to when you finally close your loan. So please just know that in advance. Show us some grace. We're not trying to be difficult or anything like that. We do our best that we possibly can in order to get those numbers as accurate for you as possible. Once you sign those initial disclosures, your loan officer will then submit your loan to underwriting to get your initial approval. In order to do this, we need to collect a few things from you at minimum. We'll need to pull your credit and have a credit report. We'll need your income documentation. So items like W-2s, pay stubs, if you're self-employed, maybe tax returns, any sort of documentation that shows your Social Security or pension, so on and so forth. We'll need the purchase agreement, your loan estimate, and the loan application, which we get from those disclosures that we just sent to you and you signed and sent back to us, your driver's license, and your certificate of eligibility. So for a VA loan, that's very important. We have to have that certificate of eligibility that says you're actually eligible for a VA loan. Now, there's several other items that are needed in the end, like bank statements and insurance estimates and tax documents and so on and so forth. But these are the minimum things that we need upfront in order to get your loan submitted for initial underwriting. So once we submit your loan, the underwriters for the lender will review all of your initial documentation and hopefully issue what's called a conditional approval. What that means is that your loan is approved as long as a certain set of conditions are met. And that initial underwrite can take anywhere from a few hours to a few days. Once we get that initial approval, your loan officer and their team, if they have a team, maybe a processor or a loan officer assistant, will start working to clear those conditions as quickly as possible. Now, some of these are worked in the background and do not require your assistance whatsoever, but others do require direct input and involvement from you, and some can be pretty time sensitive. Some examples of conditions that we would need some assistance from you would be items like providing child support documentation, alimony documentation, explanation of variable income, signed gift letters, letters of explanation, explaining anything the underwriter is confused about as far as your loan, anything that we've submitted regarding your loan, verification of earnest money, deposits, so on and so forth. Now, during the underwriting process, your loan team will also be collecting items in order to get your initial closing disclosure, or CD, sent out. And in addition to those items that we needed to submit your loan in the very beginning, in order to get the CD out, or that initial closing disclosure out, we also need a homeowner's insurance policy estimate, property tax documentation. We take care of that. You get the estimate, we take care of the property tax documentation, and information regarding your the closing agent, so the title company, escrow agent, whoever that may be. Now, this initial CD or this initial closing disclosure is super important because your loan cannot close any earlier than 3 business days after you sign that closing disclosure. So it's a very important document, incredibly time-sensitive part of your loan process. And another note here, just like your loan estimate, the initial closing disclosure will also not be your final closing numbers. It's probably going to be a little bit closer to your closing numbers than that initial loan estimate was, but it's still not your final numbers. Another side note here is during the underwriting process, if your loan interest rate was not locked prior to your loan being submitted to underwriting, at some point you and your loan officer will discuss when's the best time to lock your interest rate in and for how long to lock it. But just keep in mind that that must be done before you can get clear to close on your loan. So once all of your conditions are met, your loan is locked, 3 days have passed since you've signed your initial closing disclosure, the lender will issue a clear to close, which will probably be the most glorious words you will hear during your entire home purchase process. It's pretty exciting. That means you're very close to the end. It doesn't mean go buy a new car or open a new credit card or anything like that. You're not done yet, so don't do any of those things. And once you get a clear to close, there's a flurry of activities that occur before you actually close on your loan, but we're actually going to cover that in a separate video. All right, well, that's the underwriting process. Hopefully you found this information useful. I wanted to say thank you all for your contributions to our community, and thank you for being such a valuable member. We appreciate you. Thank you for your service, and have a great day.